Trump is working behind the scenes to move us smoothly back onto a gold standard. Basically, is the rough cut. There's some sort of scam. There's some not scam. There's some sort of scheme underneath the hood where one day the dollar is going to be reissued by gold or rebacked by gold, and we're going to enter into a golden age, smooth as butter with no bust.
It is true, technically, that the dollar's, well, whatever you want to call the dollar, whatever it's going to be after this thing goes away, we could call it a dollar if we want to, whatever.
Yeah.
It's going to be gold. And then people are going to issue notes on gold, and you can call those things dollars.
The global financial system is currently facing unprecedented structural shifts as rumors circulate about political maneuvers aimed at stabilizing the fiat currency regime. Rafi Farber, a prominent Austrian School financial analyst and author of the Endgame Investor, along with Phil Lowe, an Austrian economist and founder of the Bitter Draught, emphasized that expectations of a smooth transition back to a gold standard are complete illusions. They explicitly predict that a catastrophic market bust is entirely unavoidable because the existing global debt structure must grow exponentially just to prevent an immediate systemic collapse. Speculation surrounding a 100-year gold bond is dismissed as dangerous economic fantasy, with clear warnings that a severe monetary impact is imminent. Discerning investors must actively brace themselves for this historic disruption before a sustainable physical asset system can be successfully rebuilt on the other side. Now, we present the clips from their interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
If I were to ask you, is gold money, before you understood that gold was money, you'd probably say yes, but you probably wouldn't understand the depths of the implications of that.
I would probably have said gold was money,
Okay.
but I don't
Maybe,
know.
yeah, okay. I could see that. Anyway, I mean, we're going to talk about that in the sense that apparently, and I'm not really part of the gold bug community anymore. I'm mostly operating on my own, which is where I usually am. I'm a lone wolf in life and in business and all that kind of stuff. I mean, I couldn't have gotten here without help from others, but I'm kind of on my own now. And I didn't hear that there was a big fuss about people saying that Trump was going to issue a 250 anniversary gold bond or something, or a gold-backed currency. And gold bugs actually believe this. It was on a few shows. I mean, I'm not aware. I wasn't aware of it. But again, with this stuff, I mean, that's not going to happen.
Yeah, the plan trusters. This was I chat with people a lot, even now, and there were a lot of plan trusters who said something big, something Trump might say something like "I like gold" or something, in a tweet, and people, oh, he's going to make a gold bond, he's going to revalue to gold at some point. But Trump covers everything in gold. It doesn't mean he's going to issue a gold bond, and it didn't happen, right? So the theory was they're going to announce a 100-year gold bond today, yesterday.
How would that work? What does that mean, 100 year
I'm
gold bond?
guessing you give them dollars today, and then in 100 years, that bond is redeemable for the gold, for some of the gold out of Fort Knox.
There's like 7 layers of retardedness in that wrapped up.
It's a retarded layer burrito. For one thing, the treasury bonds are gold note. I mean, those are promises for the gold in Fort Knox already. Like the existing treasury notes are just multiple claims on the same pot of gold. So a gold bond is just going to be competing with the existing treasury bond. Now the existing treasury bonds go through the dollar first. This would be redeemable directly, and theoretically would be redeemable directly in gold. The other thing I was thinking of was like who was president in 1926? Was it Calvin Coolidge?
Calvin Coolidge, I think, yeah.
Okay, so do you think Trump, if
Calvin Coolidge was actually not a bad president. He was pretty decent.
no, yeah, probably one of the better ones.
Yeah.
But if Calvin Coolidge had issued a 100-year gold bond, and then 100 years later, do you think Trump would be like, oh yeah, we definitely need to honor that? Or do you think it'd be like, nah, you know what? Here's dollars. We're gonna keep Fort Knox closed.
I think an alien invasion is more likely than 100-year gold bond being paid in 100 years.
Yeah,
In
well, not to
gold.
mention it also doesn't change the system. The existing debt must grow at exponential rate, or the system blows up. The 100-year gold bond is not going to alleviate any of that, not one bit. If everyone abandoned the regular treasury bills for the gold bonds, then the dollar would collapse already. And if it didn't, then the existing system would continue on. So it doesn't change anything. This was pie in the sky nonsense.
What were they thinking it would do? Like what is their thinking? They're thinking, oh, Trump's going to issue a 100-year gold bond, and then they think magically the entire monetary system is going to be fixed. Like what's going on in their
Yes.
heads?
Yes, that the theory. I mean, these are, they're not steeped. They know something's wrong, and they're in the right direction because they're stacking gold and silver. A lot of them, but a lot of them think that Trump is working behind the scenes to move us smoothly back onto a gold standard. Basically, is the rough cut. Some sort of scheme underneath the hood where one day the dollar's going to be reissued by gold or rebacked by gold, and we're going to enter into a golden age, smooth as butter with no bust.
It is true, technically, if the dollar's, well, whatever you want to call the dollar, whatever it's going to be after this thing goes away. We could call it a dollar if we want to, whatever.
Yeah.
It's going to be gold. And then people are going to issue notes on gold, and you can call those things dollars.
Well, the
But
problem is they don't want the bust. They're
yeah,
trying to avoid. They're mentally trying to avoid the bust, and you can't avoid the bust. And that's Trump's big problem. Is he promised, he promised untethered prosperity. If he had come in like Milei, and his inaugural speech was, "We are out of money, and
yeah,
we are going to cut back." I think there might have been an initial grumbling, but I think people would probably say, "Okay, well, maybe we need to tighten our belts, and this is what we need to do to get back on a gold standard and go through it." But Trump being Trump promised the moon on a platter, and now he's in a fix.
The mechanics of the global financial architecture are deeply intertwined with complex mechanisms like the yen carry trade, which has artificially inflated Western markets for decades. This specific trade involves borrowing foreign currency at extremely low interest rates to purchase higher-yielding international assets, aggressively pumping up valuations in sectors like technology and artificial intelligence. However, a massive crisis is unfolding as Japanese interest rates begin moving parabolically upward, signaling the ultimate demise of the currency. It is predicted that this massive carry trade cannot be cleanly unwound and will instead spiral completely out of control, triggering a sudden singularity event that rapidly destroys the purchasing power of both the yen and the dollar. This disruptive process will heavily deflate overvalued American assets, inevitably forcing central banks to step in with unprecedented emergency monetary printing that completely destabilizes the entire global fiat framework. Now, let's get back to the interview.
We are going to end up back in a gold standard. We are going to have a golden age after the pain of having to go back in a gold standard. But there's no smooth transition to the gold standard.
mhm,
I promise people, there's no smooth transition. Brace for impact, and then you will be the capitalists who rebuild on the other side.
right. That's what it's going to be. Our second topic is the unwind of the carry trade. I wrote about this on the Endgame Investor a few posts ago, and I came to the conclusion that the carry trade really can't be unwound. It can just kind of like spiral out of control until there's no point in borrowing worthless yen anymore. I don't have this one completely organized in my head yet,
All right, because I
but
want to challenge that.
the basic idea of what a carry trade is, you borrow yen and then you lend dollars. Is that the idea?
Yeah,
Yeah, so you borrow yen at a low interest rate and you lend dollars at a higher interest rate by buying treasuries, and then you pocket the difference. And meanwhile, the people that you lend dollars to go out and they buy stocks with it or AI bubble stuff or whatever. So it pumps up American assets and it drives down interest rates. It drives down U.S. interest rates. And as long as the differential between Japan and the United States exists, and it's been that way for decades. Interest rates have been lower in Japan than they have in the United States. Then the carry trade will keep going. And as the yen weakens, it becomes even more profitable because when you pay back the yen, you pay it
of
back in
course.
even weaker yen, and you earn that above your profit from the interest rate differential. So how does this unwind? And I don't think it can because I don't think the yen can strengthen
Well, here's the
relative to the
thing:
dollar.
when a currency starts dying, the interest rates go up as the central bank gets more involved. So the more the central bank prints, unlike previous times when the central bank does a massive print, interest rates go back down to zero, near zero. When the currency is dying, continue to go up because people don't. It's not that they think not be able to pay back. They're worried about what it will buy when it is paid back. So like Argentina had 100% inflation rate or 110% inflation rate and like a 98% interest rates on their bonds back when they were hyperinflating. So
Wait, so they still had a lower interest rate than the inflation rate?
inflation is hard to
Yeah.
calculate. So
Yeah.
I don't really know.
Yeah, especially when it's hyperinflating, all the numbers are made up. But
Yeah. So we don't really know. Inflation rate is not a real it's not a real concept in the Austrian school. Inflation is just printing notes for money you don't have.
Mhm.
But according to the metrics they were using to measure the inflation rate was in the hundreds of like 100 and something percent. But the interest rate was like 98% for their bond. And that you can calculate the interest on a bond. That is well-known information.
Right.
So what I would expect is the Japanese yen dies. And if it doesn't take because I think that when the yen dies and when the dollar dies is not going to be a long period of time. I don't think it's going to be 6 months or 2 years of hyperinflation in Japan while the Americans are like, what's going on over there? I think it's going to take the dollar with it in short order because it's so heavily connected to the dollar. But
Mhm.
let's assume there's some gap between the two. They don't immediately blow up together. If the yen starts to die, and it is starting to die. That's why if you look at the Japanese interest rate, it's going parabolically up right now. It's still very low, but it's doing this. So that if you extrapolate up, it's going to be higher than the dollar it's going to be higher than the US 10-year in pretty short order. So
If that happens, then it could unwind.
yes. So as the Bank of Japan prints more and more and more and buys more and more of the BOJ's or the government, Japanese government's debt and starts buying all the shit and just taking on their own balance sheet, the interest rates are going to spike along with the destruction of the yen. I can see Japanese rates spiking much higher than U.S. rates, and that would unwind the carry trade. Now, again, I think the unwinding of the carry trade would set dominoes off in America. So
Yeah.
it's not going to be long. And then the U.S. We could have both interest rates doing this and the carry trade coming back, but it's at 60%, 70% interest rates instead of 2 and 4.
Right. So if the carry trade pumps up U.S. assets, which it does, then an unwind of the carry trade would deflate U.S. assets.
Yeah, and then the U.S. then the Fed would have to step in to reflate, and that would be the print. That would be the big one.
So, but the unwinding of the carry trade would require borrowers buying yen back, right?
I No, because the BOJ is issuing new yen at a furious rate, so I don't think they have to buy the existing yen back.
Oh, but they have to buy the yen they have to buy the yen that they lent out,
Yes.
or no, so they have to
Sorry.
that they borrowed. Sorry, the yen that they borrowed. But since there's so much new yen coming online, because the Japanese are in a monetary crisis, then that unwinding of the carry trade wouldn't necessarily inflate Japanese assets above the rate that gold is moving higher. So it would still be the Japanese assets would still be crashing relative to gold, but not as fast as American assets would be crashing relative to gold, I think.
Probably only because if that happens, it would only be because the Japanese have already devalued so much. I
Where
mean, gold is pretty high, and I have a few. Oh, you met my friend Hyoje. He spoke on this. He spoke on
Hyojin,
this
yeah.
channel. Yeah, I mean, gold has really taken off in Japan. So it's starting to become public knowledge. Public knowledge of people are starting to scramble. So
As physical assets decoupling from paper assurances becomes glaringly obvious, gold prices have already begun soaring dramatically in Eastern nations. This trend highlights a broader psychological realization among populations scrambling to find a secure refuge from rapidly collapsing domestic paper currencies. It is predicted that as hyperinflationary forces take hold globally, Japanese paper assets will crash violently relative to precious metals, though American assets will deteriorate at an even faster pace due to their extreme systemic vulnerabilities. The financial elite cannot prevent this structural realignment, as the failure of one major fiat currency will rapidly set off a devastating domino effect across the vulnerable Western world. Investors holding physical gold and silver bullion will ultimately become the capitalized class capable of rebuilding a new economic paradigm on the other side of this great monetary collapse. Navigating this impending wealth transfer requires keen strategic attention to real physical market trends rather than deceptive political rhetoric or highly manipulated government data points. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.